Um, I guess I can do this without a video, but it's been like 4 months since my last video entry. Guess I kind of just got off of the whole journaling my trades and stuff. Been tweaking some like entry strategies and how to reread price action and just like everything as a whole. And I will be adding more to these YouTube channels because I still need to make a journal for all my trades and trading for the day and recording if I won, lost, what entries I took, blah blah blah. But just want to let you guys know I'm still stuck on one account. Well, not really stuck on one. I got this ineligible 150K. So I had gotten my first payout and started a whole bunch of other combines. So I have this account that I think I've had for a couple of days. Yeah, I had So I guess I can start by telling you guys the full story. So I have another account which I've been trading on, and I've had it for pretty much a month now. Which I don't know if you guys know this, but this is the longest I've ever had an Express ever. First year getting payouts, getting paid. So that alone is an achievement, and I put myself on that all the time. But I had this week where I took a Thursdays are my best days to trade. Some days it's Wednesdays, some days it's Fridays, but 90% of the time I hit on Thursdays. Thursdays are my best days, and I took a fat loss right after getting a payout. Somewhere in here I took out 5,000 out of my account. So I had that, and I took a L, and I got up and I walked away and I said I can't keep trading. I gotta call it quits or I'm gonna run this number up bigger. And to be honest, I was just taking trades that just weren't, they didn't make any sense. So then I followed it with another day like today. Well, not today, but another Friday, where I don't know if you guys can see this. I might have to blow this up. But I started off the day, you know, pre-market, I was down, like 400 bucks, and then market opened, and then the market, I was reading it wrong. I was just in my head, but after this happening, I started up a couple more accounts. So I started up this 150K, well this 50K, and I started another combine, and this account has to go to 106,000 balance before I can make it live. So I got to just hit 2 more days like today, and then this account will be passed, and I'll be trading on this account. But that means that these other two expresses, you know, assuming that this is gonna pass, both of these accounts will be up 6,000 each. So I might take out more money out of that and then stick to a one one con trading motion because I've been realizing every time I trade, I'll get stopped out at break even, and morally that's like some of the most annoying. That's some of the most annoying like positions to be in because obviously you don't want to break even, you want to make money, but there's nothing more annoying than being right and then it backfires on you because you got stopped out. But yeah, I need to get back into journaling and journaling my trades and going back over realizing why I didn't win or you know like speaking out loud because I'm not ever gonna go back and reread what I did. I'm gonna want to go back, leave some notes in the video from time to time where I took a trade, win or loss, my conditions, what I thought we were going to be doing, what the other time frames look like, just make me a better trader because, every day every day is something, worth watching and listening and relearning. But yeah, this is pretty much has been my journey so far. I'm up on an account, had it for more than a month. Rules with the accounts are if you have an account that goes over 30 winning days, which is 150 bucks, it's considered a winning day. So I have one, two, three, four. That's four, five, six, seven, 8, 9, 10, 11, 12, 13, 14, 15. So I have 15 more days to, get the other combine passed, which theoretically, let's say I'm right and I record Friday and go over what my thought process was. Hopefully I can get some guys in the Discord chat so you can kind of just hear what I do on a day-to-day basis. So I'll trade Friday, go for, a $2,000 win across all the accounts, so 6,000 in total. I'll come back in Tuesday, maybe Wednesday, and then by Wednesday usually I can finish, and that would give me 12 more trading days to do what I've been trying to do. So rules with Top Step are if you have multiple accounts going, so let's say that's gonna be a 100K Express. All of your all of your profits out of all of your accounts will be moved to the largest account size that you currently have. I tried doing the 150K, and then this day happened. I crashed out, lost my mind. Long story short, 4,000 is, or 4,500 or something like that. It's like the 1% of 150K. So they pretty much have you trade with a 1% leverage, or they give you a 3% or 4% leverage to make 12% or some number like that. I don't really know the numbers. I'm not getting into it. But I had this L, took a L, and then I lost that. But long story short, if I can get all three of these accounts to have about 30,000 in them, maybe 20,000, they will take all of the money and they'll put them into this 100K, which realistically, 2,000 is pretty much the average that I'm trading every day. Like Mondays, I don't usually trade, and if I do, it's like really early in the morning. Yeah, like you can see, like there's like 4 in the morning, 5 in the morning, 6 in the morning. This was random. I took a trade and took a L. I was probably up on the day and just scratched it, but yeah, I'm not really sure why I'm trading around this time. I guess I just had a day where I didn't have a lot going on, so I felt like I can get into the charts, but oh, and this was a Sunday trade. Yeah, so like this trading was being done technically on Sunday this day. But yeah, my average winning day is anywhere between 2,000 to this 4,300, and I'm trying to keep my losses pretty slim, or if I'm realizing that I'm taking a bunch of wins or taking a bunch of losses, I walk away. Like you can notice that I have a win rate of 50%, but my RR is a lot higher than my like risk to reward is a lot higher, obviously, because there's no way you can be wrong and right half the time and be able to pull out money like and be able to pull this off. But realistically, like, so if we're going on a calculator and I need to take an average, let's say this is my average, you know, take take profit. If I divide this by $20 per point, because this is your average one contract trading size, it's 120 points. Nasdaq as a whole will trade up to 120 points, like every day. Like today, today's Thursday, which is why I love Thursdays because we run on Thursdays. But from market open to the lowest that it made, it ran 636 points. You know, let's say in a world where you just happen to catch the absolute top and absolute bottom of the day, that would be what you'd make per account. But that's it. My plan right now is first off, it was to keep this account alive, and I've managed to do that. Now I've taken a payout and I've uploaded more more accounts because I can't keep spending my money that I make in the real world to keep funding this because obviously if I'm going to be a trader, I need to be able to live off of this. I can't just have a job and do this at the same time. So, long story short, the next goal is to get this passed and get all of the accounts to have somewhere in the 30,000 range. So, if I do this times 13 days, that's roughly what but I'm gonna have to hit this every time. At least 2,400 a day, which obviously I know it's doable. I do this for the most part. Outside of, not all price action or price days are gonna be like like readable, or I won't second guess or fumble into a move where I'm doing something that I shouldn't be doing. Like I could probably show you. This is my chart executions because I took, how many trades did I take today? This is like start finish. So I took 16 trades and it'll show you exactly where I got in and where I got out. So we're gonna go to preferences, chart executions. This will show you all the trades I took on the way down. So I tried, actually I'm gonna have to go to a smaller time frame. I think I was doing most of my trades on the 5 second because the market was moving so much that wait, I'm gonna have to split this up because I can't. Alright, we're gonna go to the 5 minute and then because I can't see how far I am. Like you can notice like this cursor over here that's up and down right here. Once I go over here, the cursor like moves. Wait, where's the cursor? Okay, now we're over here. So I hopped into a move. I thought it was gonna be good. So I hate that you can't really see this. Can I like zoom in? Okay. So entry strategy right now is noticing that when the 5 minute is moving, right, in one direction, we're selling off. The top wick of each 5 minute candlestick will not, so when this candle closes and closes here and a new candle opens, when the candle comes up, it treats this 5 minute as a range. So this 5 minute high will never be breached, and we will open up, do something, and then come back down. So entry model on the 30 second, it's a two up close candle signature breakout out of the closing of the range. The thought process behind this isn't the 30-second chart. I'm not going to switch over, but on the 30-second chart, you'll see two of these candles, and within the 30-second chart, you'll see 12 5-second candles. So, because that's just how this is how the candles work. Like there's five 1 minute candles and a 5 minute candle. Five, there's three 5 minute candles and a 15 minute candle, because that's showing you how price moves. So like, I guess I'm gonna have to show you this because I don't think I can explain this any better. Where is the candle? All right, once the right bar moves over on the 5 minute, bam. All right, show you guys something. All right, so this is a 5 minute candle. It shows 5 minutes worth of price action. On the 5 second, this is what the 5 minute looks like. It is trending down. It's not purging any highs. It's doing nothing crazy. It's just trending down. Trending down, trending down. So that's why it's crucial that the thought process behind this is if we are moving, we should never take out a high. So with this candle structure being this way, when this candle closed and this candle opened, I was able to get on side with, said I got in at 1450. So I probably took out this low. Yeah, I took out this low. So using this drawing tool, realizing that this is where I entered, stop at the high. I'm going to delete these bars now because now they're in my way. Alright, so we're going to do this. I don't know where the 5-minute high is. I think it's there. So, and then you would target your next area of liquidity. So like let's say I wanted to click and hold and I didn't. Oh my god. Alright, I gotta turn this off. Actually, no, I don't. Whatever. Let's just say I was wanting to go for a standard RR move. So let's say I was risking whatever and I wanted to make double. That's what this number means, too. So, so from the moment I entered my trade, which at the bottom here you can see the time. It's like you can see like each candle like when it opened up or whatever. So from the moment this candle opened, which is 9:40:15 and 9:43:50, it took me 3 minutes for this to play out. We honestly started the candle and finished before the 5-minute candle had closed. So I entered here, but then market decided to come down and come up, and it took me out at break even. So this was my first break even trade. And then the market came up, and then I didn't I didn't like that we came up with a white bar candle. I wanted these all to be like one color, but this candle never took out this high. So realistically, when this candle had came down and broke out here, I I could have entered again, but it's hindsight. I could have entered here when when it retraced and broke lower. I could have had the stop here and then the move back down. So this is hindsight, obviously. Like this isn't like, oh, you wouldn't have taken this in real life or whatever. But I did have. Oh wait, this is the fair value gap. There is a super high time frame gap where price was supposed to come down, and if shown it was going to respect it, we would have came down and bounced. We would have never kept coming down. So obviously, this is where all of my price action has started happening because I was realizing that the market started into a consolidation phase, which the price action goes back and forth and we range bound. And I was hopping in on liquidity sweeps and stuff like that, but that's a that's a different thing for me to explain. So zooming into this, I entered on this candle's closure, and then I entered again here, which put me here around some average pricing, and I was trailing it down because market came up, swept this high, see liquidity sweep here, and we started rejecting. So we came up, and then we took this candle low again. So this is me entering in for another market move. Stop here. And at this point, we're going for low-hanging fruit. So we're just going to be going for the 5-minute candle closes that it would have, you know, went through. But I had gotten stopped out somewhat here, positive. So we came up and we came back down. The moment we came back up and re-swept the same area of liquidity, which this is this. That's crazy because we almost did it again. So market came back up and re-swept and then dumped. So I hopped in at 808 something something something. 8 Oh, it was 808 flat. So we hopped in here. This is like absolutely bottom ticking the move after move. Okay? And then base hit is where I should have gotten out. But I averaged into my order. I'll be honest with you, I don't know why I when I took this trade, I don't know why it stopped me out. because it never purged that high. Like when this candle came up. See, I hate when this happens. When the market comes up, comes down, comes up, comes down, bang, bang, bang. You would think it would push up, but then the market just, re-sweeps these highs. It just swept the liquidity, and dumped. But this is some more, you know, super silly price action where I averaged in, it rejected, took me out. I took a move, it averaged out, took me out. It's a bunch of break evens because the market wasn't doing this, because once this breaks a low here, like let's say you you disregarded this price action and price came down, came up like this, swept and didn't do this, the market would have came back down and crashed. So I took a move out there and then that was pretty much it. That was my move. I'm not sure why it's not saying 2 though, cuz I did take a move. Or maybe I only did one contract. Yeah, I only did one contract. But this is my, before lunch ending finishing move. I'll go over my day as it goes, but I know I took one more move. All right. Market comes up. Where is this? All right, so market comes up, right? So market is no longer taking lows, taking lows, taking lows. Because when this 5-minute candle had printed and swept this high, I would no longer be looking for shorts. Because then the next candle would have to resweep this low for me to keep looking for shorts. I don't mind taking losses in the market. It's part of the game, you know. So when market had came down, came up, so here this high, which is this high, and it came down, came down, came down, and we came down, came down, came down, and we took this high. I know it's kind of hard to explain, but this is a low. This is a high. This is a low. This is a high. This is a low. This is a high. So when market came up and took this high out, I would have entered for a short. Or a long, I mean. So long here, probably stop there, because obviously I'm not trying to put up more risk than I should. So this is a 35-point stop. So 20 points, $20 a point. That's about 700 bucks. You could have went and took out some liquidity. These 5 minutes were putting out some relative equal highs. A bunch of people were in these moves between this high and that relative equal high. So this is your trend line liquidity where people are, you know, stacking their orders. Like there's a lot of people resting here. So if you wanted to, you could have taken it to that high. And then soon after market consolidated, did what it did. And then I took the short out of here because the 5-minute candle between all this, this is the low of this candle. Candle printed up the low of that candle. Candle came up, printed low, and then didn't take this low, but it closed within this range, which I like to see. Came up, swept, and then we took this low. The moment we took this low, I started executing short orders because here I took a L, so I told myself I should just wait. So then I took my short entry, realizing there is a gap here, this 5-minute gap that was here. Came in, and then I took the short at 814, which is here. Which honestly, I should have probably done it up here. Just realizing that we're taking out the low of this, but swing lows at this point are probably a lot better to use than whatever. So then I took this and I took it to this area. So this is a standard, 1 to 2 RR. Market comes down, we get tagged in, market pumps up. So right now I'm in the red, one contract, blah, 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 blah. So same method. Oh, this is they call it a macro. It's like the last 15 minutes to first 15 minutes of the hour, or usually where market will go to an inefficiency or liquidity areas before the new hour opens up. So the last hour hunts liquidity, and then the next hour will either continue, respect, reject, whatever. So we came down. What happened here? Oh, I got out. I got out early because I took this short entry. I took this short entry, and I got stopped out here because my order averaged out. So then I took, so the market took me out. It came up, and I realized it rejected. So I added I added a contract here, and I added a contract here, and market dumped. So once it took this area out, my true order was around here. Stop loss was up here, and then price target was this. So I shot for a 1 to 5 RR, but honestly, this doesn't matter because while I was averaging into my order had was somewhere here and it was starting to move down into this area. I was gonna target this low, but funny enough, it like came to an absolute halt and just rejected. So between this move here, I made about $1,500. And then I took a trade up here and I lost like 300 because I was assuming the market was going to come up and dump. But I didn't wait for this 5 minute structure to start breaking down. And then, and then here I made back another 1700 or 1800, whatever the 15 and minus 300 gets me out to about 2500. But this is pretty much has been my thought process because price is fractal, where the structure of the daily candle, the structure of the 4 hour candle, the 1 hour, the 15 minute, the 5, when all of the candles are showing same direction, 9 times out of 10, you will get days where it just rips in that direction because everything that the market had to do to win has done what it's done. It's taken people out. It's did this, that, and the third. But I don't know how to explain it. Markets do what they do. I don't, you know, none of this is financial advice. This is just me reminding me what I'm doing, you know, recording what I'm doing. But so this is my performance on the day. I like to use this one because it's new. But yeah, so I took this trade. Uh, this was me first move. Got stopped at a break even. Took another trade. This is pretty much break even. I took a small loss, a small win. Like all of these trades are not lasting more than a minute. So in 14 seconds I lost 130 bucks. In 50 seconds I made $275, you know. But the only time I started winning was right around this time. So I took a L somewhere in that chaos. And then I took that first short. And then when I told you I took a small loss, this was my small loss. And then these were the two averaged orders in the same direction to make, you know, to make what I made today. I'm gonna try my best to like record stuff like this so at least you guys can see what I can see. I used to do this for other people, but the only thing that matters now is me. I need to make me money because the only person that matters in all this is me. But yeah, just want to do like a short little video going over, today's price action. I was overall bearish. Like I was anticipating this move, but I was only anticipating this move till about here. So when the market opened up and dumped and I needed my 120 points or whatever, I'd assumed that this was going to be it. This was going to be the last of it. But I was very much wrong. It wanted to go deeper. It wanted to go farther and do what the market wanted to do. So I'm going to turn this off because this is going to look weird. We're going to go to the daily time frame. I have a bunch of drawings where there's a bunch of liquidity. High time frame liquidity is the best liquidity because that will pretty much guide you into a sense of where price is going to want to go. So yesterday we came down and we came up and we filled this, this is a bearish fair value gap. If this price would have came up and rejected and dumped and took out this low, like if this would have happened on this day and closed below, today, I would have assumed that all of these lows would have been taken out. But moral of the story, we came up, we filled this gap yesterday. So today I kind of wanted to see a retracement into the range because all the market did was come down, come up, come down, come up, come down, come up, and it's pretty much reacting in a range. On the monthly, which each candle is a month, when this December candle printed, it did not take a high or a low on like a bunch of like emails. Um, so a monthly will always take a low or a high, so monthly prints up, closes, new month starts, comes down, takes the high. Another month comes in, comes down, takes the high, comes down, takes the high. You get this, right? Makes sense. So when market came down and it swept this low, I automatically assumed that the month of December we were going to come up, do some funky business, and we were going to come down, dump. 25 days of price action, and December did nothing. Literally nothing. So what I'm assuming was January was going to open up here, come up, sweep this high, and then dump. Because when a super high time frame inside bar, which inside bar means not taking a high or a low, it just prints within the range. The way this candle finished the month or the day or whatever, it's going to take that direction down. So whenever you see a daily, when a daily does it, it does it 9 times out of 10. Like I honestly haven't seen a daily inside bar and it not take the low. Like obviously this is like a Friday into Monday, but you can still see that the market came down and then swept this low. See if we can find another inside bar. Is that inside bar? Inside bar. Candle closed. Doesn't take a high or a low, but it takes the low. It usually happens when it's at the high or low of a candle. Bing bong, bing bong, bing bong. Oh, these were actually good days. None of these. Ah, so this is the only. What day was 27th? I think that was a holiday. Thanksgiving? I don't know. I don't know. I think that's probably the 1 out of 10 that it never happens. But looking for an inside bar. There's like no inside bars. Inside bar, inside bar doesn't take a high or a low, but it closes up bullish because this is bullish. Inside bar. That's weird. Hmm. That's another one where it doesn't do exactly what I just said. So that's 2 for 10. Yeah, inside bar comes up. I mean, this day took the high and the low, which I'm surprised. Yeah, it did close bullish. When a high time frame candle does whatever it does, it usually will leave a footprint on where it wants to go. So like when this candle came down and swept all of these lows, but it came in respecting of the previous day range, the market came down, came up, and then it just has been up ever since. This is a pin bar, by the way. This is a candle structure, Japanese candlestick. It's like a wink wink on the daily chart of where the market's gonna want to go. Like when we have a fair value gap and the market comes down and we create this gap, the fourth candle technically will come down, tap, respect it, closes, and then the next series of days it'll come up. But what also sucks though is this candle is also playing around price action with a bearish fair value gap. So it's gap within gap. Just something else that I know. All right, we're still in July. Yeah, so inside bar closes within the side. This next candle takes the low. Inside bar here, next candle takes the low. I don't know. So you get it. When an inside bar on the daily candle prints and it doesn't take a high or a low, whichever direction the candle is showing, that next day, 9 times out of 10, it is that direction. It'll always be that way. So with the same thought process of the monthly, I'm thinking that when the monthly did an inside bar, I was assuming that January was going to come up, sweep the December price action, and we were going to dump. which also market has just also obviously has just been running in one direction for the past since April, I think. I think this is when Trump got elected or something like that. I don't know, but yeah, Trump got elected. All the but on the monthly, I've never seen an inside bar on the monthly. It doesn't occur ever. I've never seen a market halt. So I've never seen this before. So I was kind of to see if my intuition was going to be correct, but I also could be being told that this is the first day out of like, I said the one time out of 10 like this happens. This month might be the first time that's ever happened, and it does the exact opposite of the daily candle. But there's always, you know, things to learn, things to process, things to record, literally, because this is why I'm doing this, because I need to teach myself how to read this stuff. Another thing that helps too is, guiding yourself from week to week is looking at the weekly candle, realizing what the weekly did, and realizing like what liquidity it took, rejected, respected, taking out weekly highs, weekly lows, because same as the daily, the weekly will take a high or it'll take a low, take a high or take a low. Like last week we came down, swept all these lows, and then we came up. So I thought that this week we were going to come down somewhere in here, obviously, and we were going to come up, respect, tap into this gap, and I wanted it to dump. But the way the daily closed, it closed pretty bullish. You know, I'm anticipating that the market came down, tapped into all these gaps, you know, completed a daily range, and tomorrow or the next day we could be going for this monthly high at 513. If we do, that's cool. If not, you know, that's cool too. But I don't know if the weekly, I haven't checked it. Yeah, so the weekly has taken a bunch of highs. It has taken a lot of liquidity. So if for it to turn around and reverse, I would need the intermediate, like high time frame. I would need this to continue. Like I would need this candle to hold. So I'm gonna get rid of this because this is the daily fair value gap. So candle came down, 4 hours swept, and the hour, the daily finished with the 4 hour coming up, respecting the 50% of this gap. Just gives you more confluence and confidence and, tomorrow's price action that we could be going short. But I did call the majority of this price action on Monday. So right around this price action, I knew we were going to just pump up. And whenever a market that's like this and it's just running in one direction, it snaps back. So what's funny is like if I wanted to use my entry strategy on 30-second, I could have entered at 106, 107, and then had a 220 point stop loss, which is like 4 grand to take this low and then dump. So yeah, that's funny. Entering here, target here maybe because I would have probably went for that low hanging fruit. That's 522 points. That's funny. Yeah, risking 4 grand to make 10 grand. This is kind of where I want to be later in life, where I'm not trading every day. I would just want to get enough capital, get the 3 accounts into one account, figure out some way to trade. Like I don't know if I have to leave Top Step, liquidate all my positions, pull out half of my money, go on vacation with my family, go somewhere like on a cruise, or I want to take my family out. This is like the one thing that I want to do. I want to be able to take my girl out somewhere nice, you know, somewhere that she's never been. I want like I want to be able to take care of my family, and I want to be able to take care of my family and also be able to be home and watch them like grow up. Like I want to be able to be around my girl more. I want to be around my daughter more. I want to be, and if this like market mental fuck game is going to get me there, I will literally breathe on the back of this thing until it dies. Not to be like excessive or crazy, but I gotta get I gotta get this to work. I'm excited though, because I know I'm gonna get it. I'm determined. But I'll catch you guys later. I think Amy might be home. Yeah, it's my TED Talk. I'll catch you guys tomorrow because I should be recording. Peace.